Hey, what's up, my beautiful people? It's your boy Devo, some motivational, back with another day trading Mondays watch list, okay? And so, real quick, I want to say thank you all for all the likes, the comments, the subscribes, and everyone who's with me on the journey. We gained actually two more subscribers. We're very excited about that. You know what I'm saying? And in the grand scheme of things, it may be small. You guys may be like, really, Devin, two more subscribers. But hey, for me, you know what I'm saying? I really appreciate every single subscribe. I look at it daily. When we if we're at 56 right now, tomorrow we go to 57. That makes me 10 times happier. You know what I'm saying? Every one of y'all really mean a lot to me, and I appreciate every single one of y'all who are with me on the journey. Because remember, it's a journey. Y'all are not seeing me make. Oh, I came in the market and made $5,000 today, $10,000, $17,000, like a lot of these, big time traders. But that's why I appreciate all of y'all who are with me, because y'all are seeing the beginning process of it. Because we will get there. We will get there. Trust me. Trust and believe we will get there. And so that's why I appreciate y'all, because y'all are seeing me when I lose $200, when I lose $100, when I'm losing $50, when I make $150, when I make $100, when I make $70, and y'all are all sticking with me through the journey. That's why all of y'all mean a lot to me. And ultimately, this is a journey, and we will get there. Okay, so I thank every single one of y'all again, and let's get straight into it. Okay, so today I'm gonna go over the fear and greed index. I'm gonna go over my investment strategy. I'm gonna go over the news that we had this weekend, and then what I can see coming up this week, along with what I can see coming this week in the markets. Okay, and so um, first of all, let's go over the Moody's report. So Moody's report is basically the credit report. Let's just read this right here. It says Moody's report released on May 16th involved the downgrade of the United States government's credit rating, from AAA to AA1, marking the first time all three major credit rating agencies, Moody's, S&P, and Fitch, have rated the U.S. below the top tier. The downgrade was primarily attributed to the rising national debt, persistent budget deficits, and concerns about the U.S. government's ability to reverse these trends. Okay, and so that is good news. Why is that good news? Because that can potentially spark another drop in the market for us to get the another buying opportunity. And right now, I really want that another buying opportunity, and I feel like we are going to get that buying opportunity, as I've been going over and over, as I've been going over and over and over again, and I will go over it again in the markets. Okay, so we had that come out, I believe, May 16th. What is today? May 18th. Yeah, it came out on Friday. That came out Friday, towards the end of the market. That is why we actually had the drop in the markets. I said, take your time. What's the rush? Okay, so as I said, um, that came out like towards the end of Friday. So during market open, we see Nvidia was at 135, Tesla at 350, and Coinbase 266 was pumping like crazy. And then after hours, we seen Nvidia drop to 132, um, down 2.5% basically. Amazon down 1.7%, Apple down 1.5%, um, Coinbase down 2%, and real quick, I just want to pull up my Robinhood so I can look at the ETFs that I trade and that many of you probably trade, like the SPY and the Qs. Why the SPYs and the Qs? Why do we trade those? Because that is the overall market. The Qs is basically the Nasdaq if you trade futures, and the SPY is basically the ES futures, the S&P 500. Okay, and so these are just the lower, basically the lower like priced ETFs. Okay, and so the SPY towards, sorry about that, beautiful people. The SPY at the end of the market was at 594, topped out at 594, and now it's at 588. And our Qs topped out because it was running on Friday. Friday we were getting massive pumps, and the Qs um topped out at 521, and now it's at 514. So that is a $7 drop. So the Qs dropped hard. Oh, the SPY dropped hard too. 588 to, 594 to 588. So they both dropped pretty hard, okay? So $6 drop on the SPY and a $7 drop on the Qs. And as we see, Nvidia down $3. Tesla down $9, 2.8%. Apple down 1.5%, $3. Amazon down $3, 1.7%. And so we're getting a little bit of a drop, and that is good, okay, because that can spark that pullback down to our 200 moving day average, right here, right around this 570. That can spark that move, along with other news we're going to go over with. So that can spark the move down to this 200 moving day average. Along, if it wants to go further, it can try to fill this gap and potentially, sweep out this little higher low down here. If it wants to go that far, I don't know if we'll go that far down. I'm letting you guys know. I don't know if we'll test these lows or come back down to this higher low. I don't know if we'll come back that low, but potentially we could come back down and test this, hit this gap. But for sure, I'm telling you guys, for sure, we are going to come back down and fill this gap around this 200 move day average. I feel like that's pretty much a guarantee we're going to get that. So whenever we come down and test that 200 move day average, that's when I'm going to start dollar cost averaging pretty heavy in. And then I'm a dollar cost average in right there, a little heavier than what I normally would, because that could be our final drop. But I'm not just going to throw everything in the market, because it could not be the final drop. You know what I'm saying? But I will be dollar cost averaging higher into that drop, and then looking to see if we're going to drop further. And if we are dropping further, I'm gonna just keep dollar cost averaging, because you never know when that market will turn back around, because it's not going to go tank again. If anything, it's just giving us another buying opportunity. And so we never know when that buyer opportunity is going to be over. So that's why at this 200 moving day average, that could be our final test. Why do I feel like that? Well, why do I know that it's going to come down to that 200 moving day average? Why do I know that? Because look at it. As you know, in a bear market, it drops down and it comes up and tests this 200 moving day average, acts as resistance. When it's coming out of that bear market, we see it acts as support. When that 2020 COVID, when it had that V-shaped recovery, what did it do? It pumped all the way through, but then it had to come down to test this 200 moving day average. Had to test this 200 moving day average to see if it's going to hold up. Look, when we broke through this 200 moving day average, we used it as resistance. When we broke back up, we used it as support. So anytime we break through it, we're going to use it as resistance to test it, just like we did when we dropped this year. We broke down, we pumped back up and tested this 200 moving day average, used it as resistance, dropped back down. And we pumped through it, we're going to come back down and test it, okay? And it's pretty simple. That 200 moving day average in big drops like this, it's pretty much textbook, okay? And so that's what I will be waiting on, is that 200 moving day average. And real quick, so I want to tell you about my investment strategy that I've already had. So I took profits from my Meta and Tesla. I left my Nvidia, all my investment in there. I'm willing to ride Nvidia if it drops lower, which I'm pretty sure it will do, drop lower. I'm willing just to ride with it. I'm not taking profits yet, because I feel like Nvidia is going to be, I feel like all these stocks are going to go way higher, but Nvidia I feel like has one of the biggest potential gains. And so I don't really want to take the risk, because I have a pretty good average price. I don't really want to take the risk of taking profits. I just want to leave it in there, and I'm just going to keep adding in Nvidia. Tesla and Meta, I took some profits out along with some of my investment. And then when it falls down, when Tesla comes down, because this is where I can see it coming down to. So we see how we had this heavy resistance around this 305, heavy resistance. When we fall back down and test towards this 200 moving day average, along with testing this resistance, acting as support, that's what I feel like would happen. This is when I'm going to start loading up right around here. That's when I'm going to start loading back up on my Tesla. And so that's what I did. I pulled my profits out, because remember, we were up big. When we invested when it was lower. We invested in Tesla in these 200s. Our average price was right around 250, and it was only 250 because we kept adding on the gains up. But really, originally our average price was around that 230. So we had massive run ups in Tesla. So we took our profits along with taking some of our investments out. So whenever it falls back down, we can re-employ our profits along with our investments. So we'll have more. You see what I'm saying? So we use the profits, and whenever it falls back down, we're gonna start adding more into it for the massive run up, because we are gonna have this massive run up. We don't know when, but in 2026, I can guarantee you that's going to be in the middle of that bull run. 2026 is going to be bull run. 2025, we can have more of a choppy year, more of a down year, more of an accumulation year. That's what I'm seeing. 2025, this year, I can see more of an accumulation year because of these drops, and we might have another test a little bit, not as toward the bottom, not as toward this bottom, but a little bit more of a drop to just accumulate, and then around the end of 2025, 2026, that's when we're going to be on that massive bull run, okay? That's what I'm telling you guys. I feel like it's going to happen. Do your own research. This is not financial advice. I'm just telling you guys what I'm doing, and you guys know I like to be completely transparent with y'all, okay? And so whenever it comes back down, test this 200 moving day average along with using this resistance as support. This is when I'll be loading back up and putting my profits back in on Tesla. Do I have Meta on my watch list? Okay, I don't have Meta on my watch list. I don't know why I don't have Meta on my watch list. There we go. I put Meta on my watch list. Okay, as long with Meta, I have a couple other things I want to be investing in, like Palantir, MicroStrategy, SoFi. SoFi is one I'm very bullish on. SoFi, Uber, Coinbase. Those are some good ones. You know, Costco and Netflix, I'm kind of looking for a bigger dip because they're already so expensive. You know, they already did such a big run up. So, those I'm looking for further drops. But those five are ones that I'm very intrigued and going to add into my bag. SoFi is definitely number one. Granny Strat, that is Tom Lee's ETF, I'm adding that. MicroStrategy, I'm adding that. Palantir, I'm adding that for sure. And then Uber and Coinbase. Those are the six that I'm going to be adding into my portfolio. The main one that I'm looking to add like immediately is Granny Strats, SoFi, and Palantir. Those are ones I'm looking to add into immediately. MicroStrategy, maybe during the bear market of crypto is whenever I'll be adding MicroStrat. Why? Because MicroStrat pretty much follows Bitcoin because they're so heavily invested into Bitcoin. So when Bitcoin falls, MicroStrategy falls. When Bitcoin pumps, MicroStrategy pumps. So that is what I'll be looking at. But so on Meta, I can see us falling back down to this area of resistance right here around this 600, along with testing this 200 moving day average. Previously, as you can see, we test 200 moving day average. During these big drops, we pump up and we test these 200 moving day averages. That's textbook. The 200 moving day average is textbook. It will follow this 200 moving day average always. As you can see, during this whole run up, what did it do? It tested this 200 moving day average to make sure it can hold up. And when we broke through it on the downside, what did we do? We came up and tested the 200 moving average and broke back down, tested, bottomed out at this low, and now we ran up. Now I'm looking for a drop back down around this 580, 570, or even around the 600 exact mark, and that's when I will be loading back up on Meta with the profits that I had made from Meta along with some of my own investment money, and we will be ready for that massive run up. Okay, so that was just some of my investment strategies I'm showing you guys and what we should be doing. Not right now just throwing money in because we see it pumping. No, that is trend chasing. You don't want to do that. We should be loading up on these down periods so we can enjoy these run ups, so we can enjoy these 20%, and we know it will break all-time highs, so we can enjoy them 25 and 30, 40%. If you invest right here where we're at right now to all-time highs, that is 3% of your money. And then, okay, if it breaks up all the way up to 700, 17% of your money, that's good, right? That's good money. 17% of your money is good. But imagine if you could invest at this 200 moving day average. I'm not even saying getting it from all the way from the bottom, because a lot of us didn't. You know, I mean, I got it towards the bottom, but I didn't get it all the way at the bottom. But let's just say, because we're going to reload up at this 200 moving day average, Let's say from this 200 moving day average up to 700, that is 25% of your money. You see what I'm saying? And during the drop again, we'll take profits and redeploy. You see what I'm saying? So it's a cycle, and you just got to keep playing the cycle, keep playing the game. But it's a long-term game, guys. We got to be patient during it, okay? Okay. And so, just like on Tesla, I bought it. I was buying it during this 250, 230, 220 range, and when we got all the way up here, I was up 43% of my money. Wait, no, because my average was around 250. And my average was around 258. I was up 35% of my money. You see what I'm saying? And so I got to take those profits and redeploy them. And I actually bailed out. I actually sold some of my stuff around 340, around 344, 343. So I was up 33% of my money. And I was up a little higher, but it had came down, and that's when I was like, all right, I'm gonna take profits because we're getting towards the resistance. We're getting some, we're just getting towards the resistance. We're getting towards the area where we need to pull back. So I decided to take my profits. I might miss out on a little bit of profits because, as we see, we do have a little bit of room to run on Tesla. If we want to keep pumping, we do have a little bit of room to run on Tesla. But I was like, okay, I'm going to take my profits here, wait for this pullback, and that's when I can redeploy my profits along with some of my own capital and enjoy that bull run whenever we're going to have that. Remember, the bull run's going to happen, but it might not happen exactly right now, but we're looking in the long term, remember, okay? So I was able to take my profits right now, and when I wait for this pullback to this 200 moving average or this previous resistance making a support, I can redeploy my profits and my capital and then enjoy that bull run. You see, I keep saying it over and over, but I just want to get it into you guys to show you guys what I'm saying. So I had 33% of my money, took those profits, and now I'm waiting on those profits so I can redeploy them to these areas, okay? Man, Meta didn't add to my watch list. Along with Meta. So Meta, come on. Okay, so Meta had a really good average price as well. Right around the 550s, 560s. I think it was like 559, something like that. 558, I think that's exactly what it was. And I was able to sell it right around the 640-ish, I think it was. So I was up around 15 or 20% of my money. Somewhere, yeah, I was around 15 to 16% of my money. So I was able to take those profits, and now I'm waiting for the pullback to my previous resistance support or my 200 moving day average area. And then I'm going to heavily throw my profits back in there along with some of my capital, and that's when I can enjoy that bull run of Meta, right? Because up to the all-time highs, 33%, and as we know, it will break all-time highs, and it's gonna fly through. Meta is a really good company. I'm letting you guys know right now, and you'll get Meta's $1,000 stock eventually. I'm not saying right now or even in a year, but eventually it's $1,000 stock. In about 2 years, Meta's $1,000 stock. As we see, it's already at 700. And honestly, next year it could probably run up to the $2,000. I mean, the $1,000 stock. I said 2,000. That's kind of crazy. And so look at all that percent, 53%. You know what I'm saying? So we took our profits. We're waiting on our pullbacks to the moving day average, to the 200 moving day average, because as we know, the 200 moving day average is law. The 200 moving day average is law. The market will follow this 200 moving day average, okay? When it breaks through, it will come up and test it. Well, it couldn't break through at that time, so it broke back down. It bottomed out. You see this double bottom right here. It pumped back up, and now we're waiting on this pullback down to this 200 moving average, okay? And so we took our profits. We're waiting on this pullback down, and then we're going to enjoy that bull run, okay? SPY. Now let's come back down to the SPY. Okay, so our 200 moving average on the SPY is right around this 570 area. So we can see it filling this gap and touching this 200 moving average, okay? So what can I see is bringing us there? Well, so we had the Moody's report, which is basically our credit rating, basically telling us that our debt is really high, which means we all know it's at around 36 trillion. The downgrade was primarily attributed to the rising national debt, persistent budget deficits, and concerns about the U.S. government's ability to reverse these trends, okay? It says Moody's cited the increase in government debt and interest payment ratios to levels significantly higher than similarly rated sovereigns as the primary reason for the downgrade, okay? So that can help us give us a pullback along with Donald Trump and Walmart, and I'm pretty sure there'll be more bad news coming out this week and and we'll get more bad news to aid the pullback. Okay, so Walmart previously said that they're gonna have to raise prices, that they're gonna try to keep prices as low as possible for as long as possible, but due to the tariffs and the slight retail margins, that there we will be seeing a little bit of an increase in prices. And Donald Trump posted on social, Walmart should stop trying to blame tariffs as the reason for raising prices throughout the chain. Walmart made billions of dollars last year, far more than expected. Between Walmart and China, they should, as it said, eat the tariffs and not charge valued customers anything. I'll be watching. It's so weird, customers. And I get what Donald Trump's saying about eat the tariffs, but it's like, so if we have a company, in order to get our products in from these other countries, it costs more. In order for us to continue making our money, we have to make up that difference. You see what I'm saying? So if it costs $2 for me to import to get something from a country and we sell it for $5, right? So we get that $3 gain, okay? Just say that's how it's always been. But then now we have 30% tariffs on the thing. So 30, 60, 90. So now, okay, I mean, I'm not that good at math, okay, with the percentage. Now let's just say that to import it in, it's $3 to pay for that product, okay? So say if I'm selling deodorant, it was previously $2 for me to get the deodorant from China, and we sold it, so we bought it for $2. Stay with me. So say we bought this deodorant from China for $2, and we sell it at our store for $5, okay? All right, that was the normal price, okay? Everybody was happy with that. That was the normal price. But now because of tariffs, now they raised their things. Now it's $3 for me to get it from them. Well, in order for me to make up that difference, that $3 difference, now I make the deodorant $6, so I can continue making my $3 profit. You see what I'm saying? So now I raised the deodorant to $6. Now the customers are like, well, why are you raising the prices? It's always been $5 for the deodorant. Why is it $6 now? You see what I'm saying? And so Trump is basically saying, just eat the tariffs. Well, it's like, well, now I'm not able to make my money. You see what I'm saying? And so that's why the tariffs, and it all goes into the, the business aspect of it. It's like they still have to make their money, and if they don't raise their prices, they're not able to make as much money. You see what I'm saying? Yeah, it can be like, okay, you made more money than expected. You should be able to eat the cost. But if we're being real, companies don't want to lose money. I mean, they made billions of dollars. They want to keep making billions of dollars. They want to make more. You know what I'm saying? They're not trying to make billions of dollars, then all of a sudden they made millions of dollars in profit. You see what I'm saying? They don't want to go backwards. So you kind of understand it from both perspectives. You understand, like, okay, they're making more money than expected. They're making billions of dollars. Why can't they, eat a little bit of the tariffs? You know what I'm saying? You see it from that aspect, but then also you got to see it from the business aspect. Like, well, I want to continue growing my revenue. I don't want to cut my revenue down. You see what I'm saying? And so this is some of the drama that can get us more of that pullback. Along with, this is a very big thing, this fear and greed index. The fear and greed index is very important because, as you remember when we were at 4, when we were all the way down here, we were all the way at 4, and that's what honestly sparked this big old pump. Because as we know, big money, institutional money, buys when others are fearful and sells when others are greedy. That is the whole premise of investing. You buy when people are fearful because you buy during the lows, and when people get greedy and they're like, oh, the market's going to the moon, we're going to break all-time highs, that's when you start selling. When we're in this greed and itching towards this extreme greed, that's when you start taking profits from the market, because that's when institutional will be like, okay, y'all are getting greedy, boom, sell it on everybody. And then when we start getting extremely fearful, that's when they'll start buying up, loading up. And then when people start chasing, Bitcoin's going towards the moon, the market's never going to stop. We're going up to $1,000 in SPY. We're getting extreme greedy. That's when institutional starts selling their money, okay? And so the fear and greed index does not lie. The fear and greed index does not lie, along with that 200 moving day average. These two things do not lie, okay? Extreme fear a month ago, greed a week ago, previous close greed. So we're getting higher into the greed. So that's what I also can see. That's why I can also see us getting another drop, because we're already getting towards this extreme greed, and we're not even up to these all-time highs yet, and we still need a pullback. So mixed with everything not being fully worked out, because remember the tariffs aren't fully done, we're just under like a pause. We have 30% on them, and it's just a pause. It's only for 90 days. So after that 90 days, they can go back up to the 145% it was. You see what I'm saying? Or we can have a deal worked out before then. But everything's not completely worked out. Along with us needing a pullback to this 200-moving average, we need a pullback. You're not just going to keep just going like this. As we see, the market's not a straight line. There's pumps, there's pullbacks in the moment, and to pump up to higher highs. And so, as we see, the market's not just going to do this. It's not just going to do that, okay? The market's not just going to do this. We're going to need a pump, and we're going to need a pullback. So ultimately, we can continue climbing, and that's when the pullbacks will get shorter and shorter when we get higher into that bull market with less uncertainty. That's when we'll start getting like them smaller pullbacks, and then we'll really start just running up. You see what I'm saying? And getting like small pullbacks and start running up until our next correction, because as we know, the bull market doesn't last forever. We'll have bear markets, we'll have corrections, and so those are more opportunities to load up, okay? But that's what I can see is happening. The pullback, because of the fear and greed index ultimately almost reaching up to greed, along with the Moody's report, which, as we've seen, had a huge drop in the market on at the end of Friday. So that's very important, along with everything not being worked out with the tariffs, along with potentially price increases in the world, the stores and stuff like that. And so that can potentially still give us a huge shock to the consumers, okay? So real quick, what can I see on Monday? So Monday, I mean, it's a little mixed up, okay? So we're at 588 on the SPY, right? So we're right under this low area of resistance. If we want to use, you already know what I'm saying. If we want to use this resistance as resistance, we can break down to this 585, and we can potentially hold through here, or we can break through this 585 and then reach towards this 581 area, okay? But if we want to be bullish, we can break through this resistance and continue trying to pump and reach this 594 area again, okay? On the Qs, I don't have my levels marked out. I actually just deleted them, but it looks so plain without the levels. I'm not even gonna lie to you. We do have a level around this 516. As you see, it's an area of support. Trying to get a good number. As we see, this is like a good area of support. And then we have this area of resistance where it pretty much got knocked down at, where the bad news came in at. This is pretty much resistance. And on the Qs, we're at 514. So we're under this area, right? And so we have another area of resistance around this 507.35. And then you see this is where our retracement was. You see this is where our retracement was, okay? So let me turn this line green. So we see this is where our little retracement was. This isn't really like a pullback. And we're right under it, right? Well, we're right above it. We're right at this 14. So if we break this 514, you see where this little pause is, we can use this as like an order block, this fair value gap area right here. So we can use that as a potential bouncing area around this 510 area. Well, really, you see this gap right here. So this gap is around this 511. So this 511 can potentially hold up this area right here. So on QQQ, on the NASDAQ, we're right above this area of support. So we can see if we want to break through this 515 and continue pumping up. We can see if we want to use this area because we're at resistance or at support actually. So let me mark my lines out correctly, the correct color. So as we see, QQQ is at an area of support. So if we want to pump up and be bullish, we will get a pump like that. I know it'll be over here, but I'm just showing you guys. Okay, yeah, let me bring it over here so it looks better. So we're at this area of support, so we can see if we want to use this area of support, break through this area of previous support, it would make it resistance. Remember, previous resistance acts as support, previous support acts as resistance, okay? So we could see if it wants to, kind of range through here, which will be like a slim chance because that's only like $1 move. The market been giving us a lot of volatility. It's just kind of hard. We've been struggling on capitalizing off it. We'll get on that a little later before we finish out. And so we could, if we want to be bullish, try to pump up a little bit, you know what I'm saying? But if we want to be bearish, we could use this, man, I'm all messed up. Sorry about that. We could use this support, bang down on that resistance, and then break through support and try to pump back down to this 510. And if this 510 wants to hold, it will hold a little bit, probably get a little pump up from the support, but we want to break through that 510, and that's when we can head to this 507 area, okay? So what do I actually see the biggest chance of? I'm honestly not sure, because usually when we have bad news, the market likes to pump to fake people out, and usually when we have good news, the market likes to dump. So on Monday, we could potentially have a little bit of a dump, but at the same time, we could have a little bit of a pump because we did have a drop after market. So we could have a little bit of a pump, just to fill this gap. You know what I'm saying? Because we will have this big gap down to 588 because we're already at 588. So we have this gap right here. So we could potentially pump, break through their resistance, pump a little bit, fill in this area, and then kind of just ranging through this 591, 592 area before, later on in the week getting more dumps, okay? And we would not hate on that. Why? Because again, like I've been saying, we are waiting for our pullback so we can redeploy our capital along with our profits at this 200 move day average and these area of supports, okay? And once we get to those areas, we'll be dollar cost averaging heavier, but a little heavier than we normally would because we know this could potentially be our final pullback. And we missed out on a lot of these gains because if you got in, towards this bottom area, you're enjoying that 19% ride, okay? And on my Tesla Meta, I had some good average prices towards the bottom, but we already took profits, and as we were pumping up, we had to keep deploying more and more and more. So on Meta, our average price was around 540. On Tesla, our average price was around 250. But now since we took profits, our average price is raised up a little bit. Around Tesla, it's around 270, which is still good. Around Meta, it's about the same, around 570. Okay, so they're still pretty good, and that's why we're waiting on those pullbacks. Again, let me just go to Tesla. We're waiting on this pullback. So our average price around Tesla is around 270. So right around here. So when we get down to this 200 moving average, that'll be around, it'll be around 290, 300-ish. And we'll be deploying heavier, okay? And then on Meta, again, I'm just showing all these like the strategy. Y'all don't have to be investing in the same companies I'm investing in, even though these are really good companies. So I'm saying you wouldn't be disappointed investing in these companies. But what I say is not suggestions for you guys to buy, sell, or hold. You know what I'm saying? I'm just showing you guys what I'm doing and being completely transparent. So around Meta, my average price is around 570 as well. And when we come back down, we could reach this 600, 580 area. Potentially this 560, 559, 570 area right here, this gap. And that's when we'll be loading up heavier as well, okay? And so that is pretty much it. Remember that fear and greed index, our 200 moving day average. We don't have much data coming this week, so this week should be a pretty much straightforward week. I don't think we have much data till Thursday. Thursday is when we have initial jobless claims, manufacturing PMI, global services PMI, 30-year mortgage rate. But other than that, we don't have much data, especially on Monday. But through this week, we don't have much data coming out. Last week, as you know, was a heavier week of data. And so we have a lot of stuff to watch out, though, for these potential drops. Okay, so just be patient, my beautiful people. We will have more opportunities to buy. Do not trend chase. You know what I'm saying? Unless, you're okay with holding through the down periods. But if you're okay with that, why not just wait and be patient so you can redeploy your capital at better average prices so you can enjoy the higher gains? You see what I'm saying? But nothing I say is suggestions for you guys to buy, hold, or sell. I'm just showing you guys what I'm doing on in my investing and my trading, because I just love to be transparent with you guys, okay? So real quick, down $50 on the week. Was very mad about that. I'm not gonna lie, I was pretty triggered about that, but We're gonna get better at it, and as we know, we should be up a lot more. We were up 150, as we know. On that Wednesday, we broke even, but we bailed out too soon. We panicked, and that's part of it. You know what I'm saying? You got to learn from that. We panicked because price came up to our entry point. It didn't come up against us. Didn't come up and hit our stop loss. That's why I was like, after I got out, you know, I was mad. And then after everything played out, I was looking through it over the charts. I was like, why did I even get out? All it did was come to my entry point. It didn't come up to my, it didn't come above my entry point. I was never even minus money. It didn't come to my stop loss or nothing. And then it ended up breaking down and taking those lows. Please, if you guys don't know what I'm talking about, please go to my Wednesday's recap because I explain everything. It's the one where it says 3-to-1 RR and it shows like the charts in the back of me. And I posted it on my YouTube and I said, this is just as important as any strategy. Why? Because you have to follow your strategy to the T. You can't just bail out early because things like that will happen. I missed out on potentially about $300. And so even me losing $200 on that Thursday, the next day, I still would have been up on the week around 150. You see what I'm saying? And so those are very important. And so we were down money this week, but we know we should have been up a lot more. We should have had a winning week, but as I said again, it was our mistakes why we didn't have a winning week, okay? But we're going to keep getting better. We're going to keep studying and keep working, and we will become millionaires. Remember, this year is road to 100K, but ultimately we are road to being wealthy, okay? I love every single one of y'all who are with me on the journey. Remember, guys, to study so you guys know what you're looking at. Remember to have risk management. Remember to follow your strategy to a T, and just remember to take it slow. Remember, this is a journey. It's a marathon. It's not a sprint, okay? I love every single one of you guys who are with me. Remember, guys, stay persistent, passionate. Make sure you get paid, all right? Peace.